Hi, everybody. Welcome to Sunday night. I don't know. I just figured I'd do a conversation. I had a lot of people on Twitter ask me about it. I don't market the Pax Group, and I don't market what I do during the day besides trading. Besides my trading, that's the only thing I talk about. But I don't market the Pax Group on Twitter because I want our group, the Pax Group, is a very it's different. It's a different place. I mean, I don't think there's anything like it on the internet, really, or in the trading world outside of, us. What we do is different because we support one another. Dr. Brent Steenbarger talked about, Bill Giles had told me that Dr. Brent had talked about the importance of finding a good group to trade with and to learn from and to build with. Back in I think most of you guys are familiar with me enough to know that I had a very big career on the trading floor. I had a really big, I started trading for myself in 1997. I clerked on the floor, started as a runner in 1989 after high school. I had came from an immigrant family. My father told me, you better go find something to do other than to drive a truck. I grew up in the south side of Chicago, southwest side of Chicago. De La Salle High School, did not go to college until after clerking on the floor for a few years. So I started as a runner in 1989. I did not have a rich uncle or a rich father or any sort of clout on the floor. I had to build my way up. So I knew that when I walked onto the trading floor, I knew that that's what I wanted to do. I knew that whatever the hell was going on down there, I wanted to be a part of it. So I paid attention and I learned and I worked my ass off. But as I was 22, 23 years old, and I was next in line to get my membership to start to fill orders. And I didn't want, I wasn't, hey, Merrick, it's good to see you back. Anyway, I was next in line to get my membership to start filling orders, and I didn't know that that's what I wanted to do yet. So I had gone to the seminary to study to be a Catholic priest. I raised my hand and said, no, man, I think I want to be a priest, much to my surprise even. So I went off and I spent 3.5 years in the seminary. I got my college degree. I came back on, I studied philosophy and theology. I finished early. I knew that the priesthood, I knew that celibacy wasn't for me. The priesthood was, for sure. Celibacy, no, not my thing. Five kids later, it's, and I pray to God every day I'm a good father. 5 years later, or 5 kids later, celibacy was obviously not my thing. So I went back on the floor and I started the trade. The guy that I worked for, I got my old job back and he backed me right away, and I went into the NASDAQ pit. The NASDAQ pit, I told the story on a bunch of podcasts, and you guys will hear it again. I did a podcast on Friday for Edge Clear. Hey, Matt, I did a podcast Friday on Edge Clear. So, you guys can hear the story there. There's a few things that I just kind of wanted to touch on tonight. I talk an awful lot about mindset stuff on Twitter. I don't market my group. I don't market my trading group. I don't market what I do outside of my own personal trading. We have the Pax Group Twitter page for that, and other thing. We have a website and things like that. Outside of what I do during the day to be successful, what I do during my career to maintain my consistency, how I found that consistency. I had a big career on the trading floor. Trading on the in the NASDAQ pit on the trading floor was very different than trading on the screens. A lot of the skill, trading is the same. You buy lower, then you sell them higher. That's it. It's that simple, right? But the mindset and the mechanics of that trading and how we keep that money, as I tweeted out today, or in a response to somebody, anybody can make money trading. Anybody can. All you have to do is buy them or sell them, and you got a 50-50 chance of making money. Not everybody can keep it, and even less people can grow it. And I've lived all of those stories. I've been in the middle of all of that stuff. I know exactly what it feels like to make a ton of money, and I mean millions of dollars. And I know what it's like to drive Uber after having millions of dollars. I know what it's like to get up 6-7 days a week and drive Uber so I can put food on the table while I was rebuilding my career after MF Global had failed. That was a rough spot in my life. So I had to relearn, I had to take stock, because trading on the screens was and is completely different in many respects than trading on the trading floor. So I sat down after realizing that I was no longer 100 lot or 200 or 300 or 500 lot Pax. And that was a big NASDAQ. That wasn't the minis. 100 lot would be, a 10 lot would be 100 lot. No, a 20 lot would be 100 lot. 20 bigs was 100 minis. And I'd go home with 20 on. I'd forget about 20 I had on. I gave 20 away to people. I had to realize that I'm no longer 100 lot Pax, that I was 1 lot, 2 lot Pax, that I was back to the very basics of trading again, and I had to figure it out. So this conversation is not going to be about another, it's not going to be another conversation on just yet another market profile guy or another technical aspect of technical analysis or fundamental analysis. Fundamental analysis, I've got Ira Harris for. I've got Anthony Credelli's podcast with Mark Dow. If you guys have not listened to that one last week, please go ahead and listen. Technical analysis, I've got my own technical analyst that I trust. In fact, one of them is one of my mentors that taught me how to trade years and years ago. And what he told me was, this is on the trading floor. I'm going to teach you a way of trading that will work on the floor, off the floor, in the NASDAQ, in the currencies, in the meats, in the treasuries, anywhere in the world at any time. Just listen to me and you'll be okay. You'll be okay. You'll be okay. Those words were they stuck out in my mind, and I say them a lot I say that day in and day out to the traders in our group. As long as you do this, you'll be okay, because I remember just how meaningful that was for me. I remember how meaningful it was for me from one of my mentors to tell me if I listened to what he said to do, I would be okay. So I did it. I learned how to trade the opening range. The opening range, as defined on the trading floor, is there's an opening range every day and a closing range every day. And most of you guys who have spent years learning technical analysis and other forms of market studies don't really know that. But if you want to watch, if you want to see it on the open tomorrow at 8:30 a.m. for the indices, and then at 2:59 and 30 seconds, that's the closing range. Watch the spike in volume at 8:30 on the dot at Central Time. Watch the kick in volume in the first 30 seconds of the day. In the last 30 seconds of the day, likewise, look for the kick in volume. So I take that first 30-second range and I use it as the defining block of my trades. Above, I'm going to be long. Below, I'm going to be short. The other day we had an opening range of what was it? What was Friday's opening range? What the hell is it? 41.76. 41.76 quarter to 41.78 half. So above 78 half, I'm long. Below 76 quarter, I'm short. It's that simple. One thing I know about me is I need to keep my trading simple. I can draw trend lines, and I can look at engulfing bulls, and I can look at bear traps and all bear flags and all of these other technical terms. And I traded under Pete Stottlemyre for 6 months, just me and another guy, while he was trying to update market profile and bring it into the age of algorithms in 2009. I traded under him. I listened to him. He talked to me every single day, taught us. I don't need that. What I need is to keep my trading simple. I need to be able to shut my eyes. I need to be able to visualize the market. And then I need to be able to take decisive action. That's all I need to do. The opening range gives me that, but that's not it, because I could chop myself to bits if that was all, right? Every time we down tick below on Friday underneath 76 quarter and I sold them, if the market gets back inside of the opening range, well, I lose a tick, 2 ticks. I do that 7, 8, 9, 10 times. I'm losing thousands of dollars on an 8 lot or a 4 lot or a 12 lot or whatever we're trading. So there's a lot more to it than just the opening range. There's so much more to it. I have targets that I use technical and just mathematical formulas for that. I think that every day we have the high and the low of the market in our targets, whether we're talking about the S&P, the NASDAQ, the Russell, crude. Our targets are very effective in crude, gold, or bonds. We have the high and the low in our daily trading plan almost every day. It's just a matter of doing the right things and getting there. How are we going to take action? How are we going to make money in these markets? Everybody's selling. I had a conversation with the guy that I grew up with. Actually, this guy got me my first job on the trading floor as a runner. He's my closest friend since I was a kid. How am I going how am I going to take action in these markets that just keep creeping up? And that's what he and I were talking about today. Everybody and their brother is selling the S&P, selling the NASDAQ, selling the Russell. Yet none of them are going anywhere. Well, the NASDAQ is just continually rallying. I'm not the NASDAQ. The S&P is continually rallying. The NASDAQ is kind of following along with it. The Russell is sort of sitting, kind of creeping up, but sitting. So the Russell had that massive rally. It led for a while. The NASDAQ led for years. Then the S&P sat for a bit and churned around that 3912 target. 3912 was a major target for us in the S&P. I know I'm getting off track. 3912 was a major target for us in the S&P. And the S&P, once it achieved that goal, kind of churned around there for a little bit until it decided which direction it was going to head. Once it decided what direction it was going to head, then it became pretty simple and pretty easy to take advantage of the market movement using the opening range every day. Above the opening range, I'm going to be long. Below it, I'm going to be short. Every day that we have an all-time high open, I'd be getting killed in these markets. But every day we have an all-time high open, an all-time high, and we continue to go. How in the hell are we long in these markets? Well, I've got a way of looking and visualize the market. I can close my eyes, I can visualize the movement on the domes, and I can see the market moving from point A to point B, and I can take advantage of that price action because I know that above Thursday's opening range at 41, I know above there, I'm going to be long. Below there, I'm out, and I'm going to be short. That's it. It's that simple. But above 41, where am I going to cover? If I trade in 4-lot units, we have more risk trading 1 lots and 2 lots than we do 3 lots and 4 lots. I know that doesn't make sense to you, but it takes a while for you to understand these things. I talk an awful lot about traders that have, that there's 4 types of traders, 4 types of traders. Traders on the roller coaster, right? Making 5,000, losing 10, making 7, losing 13, making 10, making 10, making 20, losing 50. Traders on that roller coaster. And then we have traders that break even. The consistently breaking even trader, making and losing the same 50,000 for 6 months, a year, that kind of stuff. And that becomes frustrating, but that's the spot that you want to be in. That's the trader you want to be. Then there's the consistently profitable trader. And that takes a lot of time and it takes a lot of effort. And I am not a trader that believes that you need to blow up an account or 2 or 3 before you learn how to be profitable. I don't think that's the case. I think, of course, adversity helps. I always traded best when I had, when my back was against the wall. I was always able to kind of, reinvent myself. And I've had to reinvent myself a couple of times. On the trading floor, I made a lot of money very quickly. I didn't have the trading maturity. I didn't have the emotional maturity to be able to continue to grow that. I invested in every restaurant and bar that my friends asked me to invest in. I invested in car dealerships and all kinds of crazy shit. I gave more money away than I can even remember. I just didn't have the emotional maturity. I can make the money, but I didn't have the emotional maturity to keep it. Then I opened up a prop room in 08 and 09. And that, that failed. We're wrong time, wrong place. In my trading career, I was always at the right time, right place. I always wanted to, that old saying, I'd rather be lucky than good. I'd rather be good than lucky all day long. I've been on the outside, or I've been on the outside of pretty much every outlier that the market has for us. Looks like we're going to be a little bit lower. I've been on the outside I've been on the other side of every outlier that the market has for us. Yet, I've always been able to continue to be consistent and be able to build my career back again because I've taken the time to be good. I feel like I'm going off a little bit too far. I didn't write any notes because I wanted to talk about questions that you guys all had for me. So why don't you just go ahead? I'll continue to talk about what I'm doing and how we trade, but why don't you go ahead and type some questions in there? And if you want to, after you type your question in, if you want to discuss it a little bit, go ahead and we'll I'll have one of the guys unmute you. But please be respectful if we do that, okay? That's the reason why we didn't just put this on Twitter and let everybody come in. Last time I had a bunch of hillbillies come in and just act like idiots or trolls or whatever the hell you call them. Anyway, there's a whole lot of things that every time I do one of these conversations, my brain is just flooded with things that I want to get across, things I want to say, things I want you guys to hear, things I want you to hear me say and learn. Because, one of the important aspects of this group and one of the important parts of what we do in the Pax Group is that we don't fight alone. Trading is not a team sport. It's not. I can't help you, or I can't make you click that mouse, and I can't make you not click the mouse. I can't make you understand that you've got less risk trading a 3-lot than you do a 1-lot, less risk trading a 4-lot than you do a 2-lot. You have to discover that on your own. Trading on the simulator is a great tool to be able to discover that. You guys have all heard me talk about in the group, you guys have all heard me talk about giving the market your time and not your money. You guys have seen me tweet that. Give the market your time, not your money. We've got plenty of time. Even if you're in your 60s or 70s or even older, and we've got traders that old. Even if you're that old and you're starting a whole new career as a trader, every day is a new day. Every trade is a new trade. And the only one that matters is the next one. The only trade that matters is that next trade. I can tell you stories about making multiple millions of dollars in a day. I can tell you those if you want me to. And I can also tell you what it was like to lose $1.5 million in 30 seconds and $1.5 million that I didn't have 2 years previous to that. I can tell you those stories. But that's all they are, just stories. The only trade that matters is the next one, and that's the one I concentrate on. Given your experience, what would you tell the new trader about the mindset he or she needs to make consistent profits? Oh, Corinne, that's a great question. The mindset, first of all, don't rush. Oh, man alive, don't rush. Every time that I've been in a hurry to make a lot of money, every time that I've been in a hurry to I don't know, pay bills or buy a new house or buy a new car or just simply put food on the table. Every time I've been in a hurry to do something, I've only gotten myself in a lot of trouble. Focus on that next trade and that next trade only. That's it. Whether you use the opening range as your process and the way that I manage my positions with 4 pillars of capital management, 3 rules of execution, all of the little other things, the 7 secrets of success, all of these things I've enumerated over the years, or whether you've got your own process, take your time. Don't be in a hurry. I know that there are traders that are going to be in here that are waiting for me to talk about the next big thing. Hey, we're going to 45.42, be long. Good. If that's it, please X out of here. This Zoom call is not for you. Skedaddle. We are going to 45. The S&P is going to 45.42. It is. How? I don't know. But we will see 45.42. Mark my words. I'm interested in joining. Can you describe what to expect after joining? How does typical day look? Is it only one after about one trade after cash close? No, okay, thank you, Matt. That's a good question. And if you join our group, that's wonderful. I hope you do. But let me tell you something. I make my living trading my own accounts. I feed my family trading my own accounts, and my wife said this to me a couple years ago. Yeah, a year and a half ago, 2 years ago. I feed my soul in this group. My wife is Greek and Irish. I'm Irish. She's Greek and Irish, and that means that I can be emotional at the drop of a hat. I can sing Carrick Fergus with a couple of drinks in me, and I'll end up crying my eyes out. Anyway, so what you can expect every day is that we're focusing on every morning. We're focusing on building a routine. I would want you to build a morning routine so that when you come before the screens, whether it's for the currency open at 7:20 a.m. Central Time, or the interest rate, the Treasury open at 7:20 a.m. and the gold open at 7:20 a.m., or if it's crude and the energies at 8 o'clock, or if it's indices at 8:30. I would want you to build a morning routine so that when the markets open, you're peaking. Your mind, your spirit, your soul, your body. You are alert. You're strong. You're ready to go. You're peaking. And going back to Corinne's question, you are ready to focus on that next trade and that next trade only. Okay. So let's just use Friday's example of the opening range. 41.76 quarter to 41.78 in the S&P, right? We didn't rally Friday. We broke. It was the first day we broke, but we didn't get a reversal on the 50 by 3 point figure. We have not had a 50-point reversal in the S&P since, can anybody guess when? I'm not looking at my charts. We have not had a 50-point reversal in the S&P since March 23rd. We have rallied from 38, I forget when the hell it was, 38 someplace, all the way up here without a reversal, a 50-point reversal. It's just an amazingly strong freight train. So this market is not, we're not going lower. So why fight it? Why fight this market? No, okay. Friday, we had opened up Friday under the opening range. I sold them. I came in bullish. I mean, man, I'll hold on. I'll get there. One thing you'll know about me is that if you ask me a question, I'll eventually answer it, but I'll try to answer it, like in 20 different ways so that you really come to an understanding of it. I don't ever use the word discipline or patience, ever. You'll never hear me say, God, come on, Matt, be disciplined. Come on, Matt, be patient. It's like when my son was pitching his first day the other day, his first day back, he walked a couple guys. Come on, Gabriel, throw strikes. You think the kid's up there trying to walk everybody? Of course he's trying to throw strikes. Come on, Pax, be disciplined. You think I'm not being disciplined? I'm throwing all caution to the wind. Get out of here. So I don't use the word discipline. I don't use the word patience. But what I do is I define it every day by my actions, by my words, and my deeds. And that's the most important part of our group. That's the hashtag nobody fights alone. That's the part where the Pax Group is important, because we all focus on the next trade. We all focus on defensive trading, protecting ourselves 100% of the time, always. So I would help you, and I would want you to build a morning routine. Like I wake up at 4:45 every morning. My wife usually wakes up around the same time I do. If she stays in bed a little bit later, then I make my side of the bed. If she wakes up, I make the entire bed. That's just one thing that I do. Next thing I do is I just I need to reboot my brain, right? So I do some slow breathing, do some breathing exercises, about 15 minutes worth. And it helps get the blood flowing. I'm 52 years old. I can't pop out of bed anymore and just, go at it. My joints creak. I got gray hair. Things don't work like they used to. I got to get up and go to the bathroom a few times extra. So breathing helps reboot my brain, gets the blood flowing in my body. And then I do some light yoga, some stretching. And that gets everything going, my muscles working, right? After that, I'll pray the rosary. I'll pray the Psalms. I'll pray a little bit, or I'll do a guided meditation. I use the Calm app. If you guys have an iPhone or an iPad, download the Calm app. do some guided meditations to help. And we do that on Mondays. We have an energy practitioner who's a trader in our group, Danny Sitlow, who's the daughter of my mentor, Mickey Hoffman, who came into our group last Monday, or Monday and a half ago. Every Monday, we call it Mindfulness Monday at 12 o'clock, Danny leads a guided meditation meant to help you become a better trader by visualizing the market, by relaxing your brain, by relaxing your mind, right? As I was saying right before the open, whether it's the Treasury Open or it's the Energy Open or the Indice Open, when we come before the market opens, when we go through our morning routine, I go through my breathing, I go through my yoga, I do my prayer, my meditation. Then I come down, I get my cup of coffee, and I grab the news, I get the Financial Times still delivered, and I read that, go on the internet, find out what happened overnight, look at the price action, make the adjustments to my targets, and then I go, last thing I do is I shower. And then I get dressed, I come down, and I'm on the screens talking to you guys at 8 o'clock and I send out my plan. I type up my plan about 7:20, we send it out, or 7 o'clock, send it out about 7:20 Central Time. So market opens at 8:30. We have the daily opening range that we can initiate at, and then we have our targets that we can initiate at. Our targets might be, another word for our targets might be pivot points or support and resistance, but our targets are different and they work differently and they're very effective. One of the things that I heard years ago, one of the things that I heard years ago was we can have the high, most traders can have the high and the low of the entire quarter and still lose money, let alone the entire year, because we would get in our own way. We all get in our own way. That's the problem, right? Anybody can make money. Remember that earlier? Anybody can make money, but not many people can keep it, let alone grow it. Even that's now that brings us to that stat that 90+% of traders fail. Why do they fail? Is it because they don't understand market profile enough? No. Is it because they don't understand stochastics or the MACD or the RSIs or Fibonacci extensions, retracements? In this case, extensions? No. It's because they get in their own way. They fight the market. Like I was talking about with my friend Frankie earlier. These are markets, these dreaded, we call them the dreaded creeping rallies on the floor. These markets were markets that would get me in a lot of trouble because we're just an all-time high open, all-time high open, all-time high, all-time high, all-time high. How do you trade that? How do you trade that? One big rule that I had, Matt, and this is something that I'll teach you every day, and again, not just from little things, not just from using the terms, but from what I do and how I do it. One of the things that I want all you guys to understand is only concentrate on the next trade. If you miss it, there'll be another one. There'll be another trade. Don't chase it. You don't need to make $1 million tomorrow. Don't trade overnight. That's a horrible idea. Trade when the volume is heaviest. And if you don't find the momentum of the market easily, then forget about it. Stop trading. I call it my 2x4. I use a 2x4. I'll give myself a different 2x4 as we go on. But my 2x4 is if I don't find the momentum after two trades, that's it. If I don't find it after 2 trades, then I cut my size. So if I'm trading an 8 lot, I'll cut to a 4 lot or a 6 lot. But I will cut my size. Defensive trading is the most important aspect of my trading, and that goes back to mindset. Defensive, and that's how you're going to make consistent profits and stay consistent, is understanding that defensive trading is the key to everything. That's the key. Be defensive on everything you do. So, man, if I don't find the momentum of the market, brother, if I don't find it easy, I'm going to cut my size and I'm going to give myself 2 more attempts. I'm going to give myself 2 more trades. And after 4 trades, if I don't find the momentum after 4 trades, I'll go make a pot of tea. I'll go work out. I'll go for a run. I'll go take a nap. or I'll just sit and tell stories, and I'll do that all day long. I tell stories about that's when I start going off about the $1.5 million, 30 seconds, and all that other shit. Now, some traders find trading out of the opening range is chaotic. Well, we have targets. Okay, let me pull up our plan from Friday. We have targets that we can initiate risk from. So, give me a second. Peter, can you post the plan in the chat? You know what? Let me do Thursday. Yeah, okay. So the opening range on Thursday. This was a good one because it was an all-time high open, right? So the all-time high open on Thursday was 41. The top of it was 41 half. The bottom of it was 41.43. My first target was going to be 41.54. Okay. And then I've got what I call price points. So price action over 41.57 to 59, targets 41.61 to 63. Okay. So above 41 half, we got long. One characteristic about these dreaded creeping rallies is that the market has been coming out of the opening range very crisp and very cleanly on the first few attempts. So somebody had asked me a while back how much I'm willing to risk. Thank you, Peter or Adam, whoever did it. Somebody asked me the other day just how much I'm willing to risk on every trade. My response is always funny. It's not funny. I mean, it's something that I don't think people expect. I'm not willing to risk anything. My years of taking risk are over. My God, I buy. If there was 200 offered coming out of the opening range, and I mean big ones, that would be $200,000 every 10 points in the NASDAQ. I'd buy them. I wouldn't care. To me, a 200 lot, when you're trading size, trading a 200 lot is the same as trading a 20 lot. It's the same thing. Sorry. So I have something. I don't want to get into it. I have NHL, and sometimes I have a hard time catching a cleansing breath. Anyway, the low grade NHL. So the point is, we come out of the opening range pretty crisply and cleanly. Sometimes traders feel chaotic coming out of the opening range, like it's too hard to buy 41 halves. And remember, I'm not a big fan of risk. I've already taken all the risk I want to, so I'm not going to buy 41. Or I'm not going to buy 43s and put a stop in at 40. I'm not going to do that. Even though it's 3 points, I'm not doing that. If I'm going to buy 43s, I think of the opening range as a room. 43 right here is the top of the room. 41 half right here is the bottom of the room. Above 43, I want to be long. Below 41 half, I want to be short. In between it, I want nothing on. So if I buy 43s and the market gets back inside the opening range, I'm simply out. That's why I like trading the S&P as opposed to the NASDAQ, because I've got access to every tick. I may as well utilize it. Now, sometimes I don't get a scratch. Sometimes it costs me a tick or two. But here's the thing. As long as I live by my 2x4, I'm willing to spend money, not risk it, but I'm willing to spend it. You guys have all seen me tweet that. I'm always willing to spend money to make money. I'm not willing to risk it. Spend money to make money. So I'll buy 43s and I'll try to scratch them if they get back inside the opening range. And if price, I trade on the DOMs, as you can see behind me. So if price goes 43, if the price comes back through again, 3 bid, I get long again. 3 bid, 4 bid, 5 bid. Now, I call it the market protecting me. So if I buy 43s, I have to protect myself until the market protects me, right? So the market protects me by staying bid above my price. Once the market is bid at least, or offered if we're short, once the market is bid at least 1 point above 43, I put a hard stop in just inside of the opening range. Because remember, if the market, think of the opening range as a room. If the market is back inside that room, I don't want to have anything on. I'm flat. So once the market gives me at least a point, I put my stop just inside of the opening range at 43 or 42.5, 42.75, depending on the market, depending on how volatile and busy. The size of the bids and offers. Now, I don't look at bids and offers ever for trading decisions, but I will look at the size and the bids and offers and the size of the opening range. You know, different market conditions determine my size. So when we have, like I said earlier, if there was 200 offered in the NASDAQ in the pit, if there was 500 offered in the NASDAQ in the pit, and we were breaking out, and a broker went 500 at even, bam, that's 500,000 every 10 points. I had no problem trading those, none, as long as it fit my parameters. So that's about as high as I would go, by the way. And only in Mercer, I was a 100 lot trader, not a 500 lot trader, but every so often I would. You know, so the point is that as long as the market fit the parameters, I would take the trade. So on days where like we have now, where we have 200, we're 200 up in the S&P, 200 aside, I'll increase my size a little bit because the market momentum isn't that strong. These are directional markets, not bouncy, you know, back and forth 30, 40, 50 point noisy trades before we make the move. These are directional markets. We just creep up, creep up, creep up, creep up. And many traders, and me included for many years, have found these markets incessantly hard to trade. Not now. Now it's about as easy as pie to trade these markets. Thursday's opening range was 43. What was the high? Where do we open? 66, a little bit lower. The high was 66.5. Wait a second. Let me look at the pit. CQG, I have CQG data. Well, CQG chart, yeah. All right, so the high of the day was 66.5. Our target was 61 to 63. So the market overran our target. I stayed long Thursday, and as we came out of the opening range on Friday at 76, shit, what the hell was the opening range? 76 quarter, then I got out and I flattened. So anyway, there are, man, another thing is learning how you know what? This is one of the most important aspects of trading. And I'm going to talk about this. Know how to, anybody can make money trading futures. Back to that supposition. But not many can keep it and grow it because not many traders actually know how to size up, size down, and not trade at all. There's a saying that I think I stole from Credelli. Anthony and I are very good friends, and we have been for many years. I've known him since he was a clerk. Know when to go big, go small, or not at all. How do you figure that out on your own? How in the hell are any of you guys going to figure? I couldn't figure it out on my own. I had two of the greatest mentors in the world between Mickey Hoppin and another guy, Judd. You know, I'll tell you, I didn't learn how to increase my size, decrease my size, and to not trade until after I sat down in front of the computer screens as two-lot Pax. And I was driving Uber, waiting for checks to come back, waiting for reimbursement checks from MF Global. I didn't know how to increase my size until then. And even then, it took me a long time to really kind of see back to this, you know, defensive trading idea. And when things are easy, when I see the market clearly, we all have days like that, right? Where we see a setup clearly. But maybe you got your ass handed to you the day before. Maybe you're beaten up from the earlier trades, whatever. So you don't take it, but you see it clearly. Well, if you trade in a way where you're looking for those easy trade setups, if you protect yourself with only 2 attempts before you cut your size, 4 attempts, put yourself on the bench for a bit. If you do that, and you have a routine, Matt, you have a routine even during the day. During the day, I'll go run, I'll go work out. I do things during the day. So I can keep that blood flow going. You know, we all have that lull, right? A lot of people need quiet when they're trading. A lot of people need to be quiet. A lot of people need, you know, soft music playing or dark, cold, cool. I need it loud. I need stimulus. I'll have the, if I didn't have the group, if I didn't have my traders to talk to, I'd be talking to myself. I'd be listening to, I'd be yelling at Kramer and throwing shit at the TV, listening to Jim Kramer talk or any of those assholes. The only one on CNBC we're talking or listening to is going to be Rick Santelli and Art Cashin. Those are the only two. Rick Santelli and Art Cashin. Rick and I have known each other for a long time. Whenever you would talk about traders on the trading floor, say that, it was always, I was always one of those guys. Anyway, we want those trade setups that are easy. And when you see it clearly, when they come to you and you see them clearly, take the trade, know how to increase your size. Here's a novel idea. If I said to you that there are ways to increase your size without increasing your risk, would anybody know what I was talking about? Increase your size without increasing your risk? Is it possible? Is it possible to increase your size without increasing your risk? It is. It isn't. It is possible. It's very possible. There are, you know, a real good handful of ways that I've been able to discover through my career. You know, they're not easily teachable. They're just, you know, not even easily explained. But there are times, there are things that I explain during the day that where you can increase your size without increasing your risk. And they're a lot easier. There's a lot more ways to increase your size without increasing your risk significantly. You know, increasing your size to an 8 lot with the 4 lot risk, especially the way that I trade. So remember, if the market goes 76 quarter offer, I'm out, I'm short, I'm flat. If the market goes 76 offer, I'm out of longs, I'm short. Now, I pay for my trade. I only have two rules. Use a stop on every trade. Oh, actually, maybe 3 rules. Use a stop on every trade and pay for every trade. For, you know, I talk about the 4 pillars of capital management. One is minimize my risk. So in Thursday's case, if I buy 43s and the market protects me, I minimize my risk by putting a stop in just inside of the opening range. So my risk is minimal. What am I risking? Nothing. I'm going to spend a couple of ticks. I'm going to spend money to make it. So I'll spend a couple of ticks on a 4 lot or whatever I'm trading that day in order to find the momentum in the market. If I find it easy, the market comes to a pay line in the S&P, it's 4 points from the top of the opening range to the bottom. So in this example at 41.43, our pay line was 41.47, right? 43, 44, 55, 46, 47. For a trader who's been trading for years, I'm terrible in math. I can do it on the calculator, but even then I get lost sometimes. So if I buy 43 quarters or 43s or even 43 halves, I pay for the trade. If I buy a 4 lot, I trade in quarter units. So if I buy a 4 lot, I sell 1 at 47. And then I raise my stop to break even or a scratch, which is usually about the same place, just inside of the opening range. And I put my offers in at the targets. Now the market's going to do one of 3 things. It's removed. I'm out of the equation. My ego is out. My emotions are out. I have nothing to do with anything now. Now I put my feet up on my desk, and we call it in our group easy like Sunday morning. You know, that Lionel Richie song. I put my feet up on my desk and it's easy like Sunday morning. The market is either going to do one of 2 things. It's going to come back to the opening range, stop me out, in which case I locked in profit, c'est la vie, I'm a happy man, waiting for the next trade. Because if the market comes back into the opening range, then I don't want to have anything on. Remember that room, think of the room. So the market's going to do one of 2 things. It's going to come back down, stop me out, in which case I made money, or it's going to start to rally and it's going to come up to my targets. If the market's above the opening range, I want to be long. The market will rally, and I'm going to sell them at whatever that target was. 50. I'm going to sell another 1 line at 52, or 52 to 54 on that target. Now, when the market comes out of that target range, I'll show you, Matt, back to your question about what to expect during the group. Eventually going to learn how to start adding. So I'll take profit at 52. I'll sell 1. Now I have half my unit on. If I'm trading 4 lot units, I already sold 1 to pay for the trade. That's only the 2nd rule I have. Maybe the 3rd rule, or rule number 2.A, would be to ensure that I take profit at my targets, to honor my targets. So always have a trade, pay for every trade, and take profit. Back to the 4 pillars of capital management. You can write these down. Minimize my risk. How do I do that? when the market protects me, I put my stop inside the opening range. Number two, pay for every trade. I remove my risk, okay? When I pay for a trade, it's not about taking profit. I've had traders say to me before, they've gotten themselves in trouble because they don't like taking something, they don't like taking profit at the pay line. They feel like they're giving something up. Well, you're not. You're gaining something. What you're doing at the pay line is you're removing your risk. So again, back to that 4 lot. If I bought a 4 lot at 43, we get up to 47, the pay line, I sell 1. Now I have no risk. So number 1, the 4 pillars. I minimize my risk. Number 2, I remove my risk. If I can't remove my risk, I don't want to trade. Now I have no risk. I've got a free trade on, and I've got 2/3 of my position on, 2/3 of my unit on. So number 3 is I maximize my profit by staying out of the middle. So between 43, where I'm long from, I paid for the trade of 47, and up to 52, 41, 52, I don't do anything. I put my feet up. It's easy like Sunday morning. I put my offer in at 52. I get filled. Oh, the market takes out 54. We get above 54. Now I have a question. Now I have a decision. Do I add? I haven't been adding in these markets. It's hard to add for me. I'm not nearly as good of a long as I am a short. So it's kind of, admittedly so. So it's kind of hard for me to add at an all-time high. But you know, some traders have and they found success in it. I'll just stay long my unit. So above 54, I'm looking for that next target at 63 or 62. And I put another offer in there. Now I'm long 1 contract or 1/4 of my unit. And that is what I call my runner. That is compound. You know, we've all heard of Einstein's compound. I don't even know if that's true, but he said that compound interest is the most powerful force in the universe. Our runners become like compound interest. That becomes our directional trade positions. So to recap, I got long at 43. I paid for the trade at 47. I took profit at 52. I took profit at 62 or 63. And I've got 1 contract left, or the last quarter of my position. Those are my runners. I've got absolutely no risk. And now here's the trick though, is my stop is in for a scratch. So if the market gets back down into the opening range, and I do get stopped out, I will give 20 or 30 points up on that trade. If the market comes back down and stops me out of that opening range, then, you know, okay, I'm satisfied with the amount of money that I've locked in profit. But if I want to swim with the big fish, you know, I have to start to build positions. I have to be okay with scratching that last quarter of my unit. So I do. I'm happy with I'm happy with the profit that I've locked in. Now that becomes my runner. I don't look at it. I don't pay any attention to it at night. I don't, when I wake up in the morning, after I go through my routine, I grab my coffee, I come down with the news, and I look at the price action overnight. Okay, good. Market honored that opening range. There's 2 things that you guys are always going to notice. So again, to recap, 4 pillars of capital management: minimize our risk, remove our risk, maximize our profit, and as I just explained to you, exploit our profit. That's number 4, exploit our profit. 4 pillars of capital management: minimize risk, remove risk, maximize profit, and exploit profit. We exploit our profit with our runners by building positions with our runners. Now, we take out the opening range again the next day. You know, we open up at 41.14 the other day, you know, so we start building a position. By the end of the week, you get 3 or 4 contracts signed with absolutely no risk. You have no risk on them. You got them from 80 points below, and the market's going to continue. Yeah, nice, not bad, huh? And you've made, you know, a couple of thousand. If you're trading minis, you made a couple of thousand. If you're trading micros, you made a few hundred. So the idea too is that we are not taking positions home unless we've already earned enough on the other 3/4 of our position to cover the margin. Okay, you know, my main point, my main goal every day is to not dip into the beginning balance of my statement. All right, I don't want whatever my statement says is in my beginning balance. I do not want that to be lower. Now, again, I'll spend money to make money. So of course, I'm going to have days where I spend money. but my goal is to, keep it as close to a scratch as possible. So if I end up taking positions home, I want to have earned enough money during the trade before I take it home, as a rule. And this is, or as a really strong guideline or a possible rule. I want to have earned enough on it to be able to cover the margin on it. Doesn't always happen, but it does make me think about whether or not I'm ready to take that position. Any questions? I mean, I'm giving you guys I feel like I'm trying to say too much. Any questions about anything? No questions, really? Either I'm really making sense, or I'm really making sense, or I'm not. I do, Quinn, sometimes. I do sometimes. Now, I again, oh, fuck. All right, here's another. I am not a good long. I mean, I have made decent money in the last few weeks, but you know what I'm most proud of? Joey, are you here? Joey from RCG, are you here? He's not. Okay. If he was, he could have told you. I fucking looked at my statements for years. Anyway, I'd be getting whacked in these markets, destroyed, if I didn't stick to my process. If I didn't stick to the next, focus on that next trade, focus on that easy trade when it's easy to take it. When it's hard, get up, walk away, come back later, come back tomorrow, whatever. Got my targets I can initiate risk at. All of it. I've got my plan. I write it out. I've been writing it out since the early 2000s and in a notebook. So the answer to that is going to be, in markets like this, for me, is going to be, yeah. The market comes out of the opening range. I'm looking to cover. I'm looking to cover longs, because my God, there's, one of the biggest rules, I think, in any technical analysis, in any technical way or fundamental way, is to don't buy strength and don't sell weakness. I mean, that's just kind of a simple rule, right? Don't buy strength, don't sell weakness. Holy shit, every damn day is a new all-time high. I mean, every day is no new all-time high. Gosh almighty, I'm sorry. Here I am talking about praying the rosary and praying the Psalms and stuff, and I'm swearing like a truck driver. Apologize. When I talk about the markets, I have a tendency to swear. It could be because of my years on the floor. All right, so yeah, thank you, Corinne. Yeah, actually, it's always you or Shelly or Danny or somebody else that I've always have in mind when I say that. Anyway, the point is the answer is depends, Quinn, and anybody that ever gives you a straightforward answer in every aspect of trading is usually doesn't know enough to know enough, or is just, I don't know, it's making things up. The answer is usually it depends. Now, one of the best things about me, and that I don't mind saying, one of my strengths, and this is what really one of my strengths, is that I know enough to know enough that I don't know enough. How about that? Oh shit, Mark or Merrick, remember I told you that before. And by the way, I'm so glad to see you. Nick L just came back. He was in the group same time you were. Driving a truck was my favorite job, besides working at the Merc. Besides being, I loved driving a truck. I loved it. But I know enough to know enough that I don't know enough. And I mean that. I mean that wholeheartedly. You guys will never hear me. I'll never be on. I've been on CNBC and I've been on Bloomberg a lot in 99, 2000. I like every week I'd go on, and I stopped doing it because every time I go on Bloomberg or CNN for an interview, I got a gift card to like Roots Chris. Meanwhile, I just missed $200,000 worth of trades. No, thank you. I could buy Roots Chris with the amount of money I just blew talking to you, Santelli. Anyway, that was back when nobody really paid any attention to him too. So I know enough to know enough. I don't know enough, and you're never going to hear me use big terminology. Like I said, I don't like using the word discipline. I don't like using the word patience. I like to explain discipline and patience through anecdotal stories or just my example and the example of other traders. I've got the great benefit. I've got the great benefit of my experience, of my years and years of being a big trader, being a successful trader, and being a small trader and rebuilding. I've got the benefit of that experience. I've also got the benefit of hundreds of other traders that I've known and that I've watched. I don't know how you guys do it anymore. On the trading floor, I can see a trader. I can see Vince D'Agostino, or I can see Ross Deutsch, one of the best traders I've ever seen, or Emo. I can see Edmund Mercatician, God rest him. And I can watch them trade, and I can say, or Louis Borsellino, wow, that guy's a great trader. I want to be like him. And go ask him a question when he's walking past. That's actually how I got to be friends with Ira Harris. Ira Harris is on the board of directors of the CME Group. This Ira Harris, by the way, just for you guys, your information so you know, Ira Harris is one of the reasons we're all here. Believe me, Ira did some very, very, very unpopular stuff on the trading floor. Nobody wanted it to go electronic, but Ira, with Leo Malamed and others, nobody needs a history lesson, but they were the ones that foresaw the future and knew that customers, if the CME was going to stay viable, it was going to have to go electronic. That destroyed a lot of traders' businesses. A lot of people have never recovered, but they gave us shares in the membership as our going away present, and that was an awfully big going away present. A lot of guys sold their seats before it. My ex-wife got my shares, all 12,500 of them, every single one of them. I got the lake house. Oh my God, that one keeps me up at night. I don't have many regrets. That one is one. Not that my ex-wife got it. I mean, anyway, I made the money for her and the kids. I've been married 16 years, very happily to my partner in life, my wife, Jen. And we have 3 beautiful kids. I have 2 older kids from my first marriage, 23 and 21. My oldest daughter is graduating from the University of Iowa grad school next weekend, actually. No, 2 weeks from now. And my son Danny is a pot smoking snowboarder in Vail, Colorado, spending his daddy's money and also his trust. He started, me and my ex-wife are letting him have access to his trust. All right, so the fuck was I saying? Oh, I don't know how you guys do it. You go to, I was able to, that's how I became friends with Ira. I would see Ira walking. I knew Ira was a big trader and a great trader. And so I just started to talk to him. Louis Borsellino would, whenever I asked him questions, he would growl at me. But, he didn't have time for me. But Ira did. It was amazing. My first name is Arthur, so my badge said Arthur Kenna on it. And I walked past you, hey, Art. Hi, Ira. But as I became a member, when I became a member, I had it changed to my name, Matt. Nobody called me Arthur in my life, except for people that didn't know me. I was named after my grandfather, and they called him Matt too. So anyway, I don't know how you guys do it. How many frogs do you have to kiss before you find a way of trading that helps, before you find a mentor or a teacher or a coach that actually helps you? Shelly, are you here? How many years have you been trading? Bill, how many years have you been trading? Are either one of you here? Anyway, they're not here. How many frogs do you have to kiss before you find a way of trading that helps? How many frogs do you have to kiss before you find something that actually, makes sense to you? That where you can start to find consistency. On the floor, again, I can find really good traders and I can ask them questions and I can learn from them and I can watch them and I can emulate them. I can be like them. Holy moly. What do you guys have? You got a bunch of 20-something-year-olds taking pictures with models and Ferraris. You too can be rich. Bar chart. I subscribe to bar chart and I got to call Naharuda, the CEO of it. I get their emails saying, you know, take your stimulus check and pour it in here. You know, their advertisements. I know that that's how they're making the money, but they I don't know how you guys do it. I really do. I'm really honest to a fault on Twitter, and I've been roasted for that, which is fine. What do I care? The only people I have to impress are somewhere in this house, and I impressed them a long time ago. And my, you know, and my God. So I'm honest to a fault, because if what I'm going to do here is going to bear fruit, what I'm doing here is going to bear fruit, if it's going to help traders become consistent and more importantly, stay consistent, and then to expand that consistency, then I have to be honest about what I do, and I have to be honest about what I've done and what I will do. You know, people have said, why don't you write a book, Pax? Why don't you write a book? Yeah, okay, but you know, my story's not over. Why would I want to write a book when I'm only in the middle chapters here? I can't ever see myself not trading. Like Jim Dalton, you know, he's in his 80s. He's had a stroke. He's still trading every day. Trades 1 and 2 contracts, 3 contracts every so often. I love this. I love this job. I can't imagine what I would have done without it. I mean, I just love it. As you guys can probably tell, I love talking about it. I love talking about it. I can talk about it forever. I can talk about it all day. I can talk about it all night. Ask my wife. Hold on. Matt writes, I've checked charts, and it seems that there are often days when price falls back into OR multiple times before it finally takes off. How do you protect against getting chopped down in such conditions? Well, there's a lot of ways, and that's, again, Matt, back to that word depends. It depends. It depends on the market conditions. But yes, if you take every, and this is important to realize, okay, if you take every uptick and downtick out of the opening range, you're going to be broke really, really quickly. Corinne, thank you for saying good stuff down there, because that stopped me from saying the F word really quickly. Anyway, you know, if you take every uptick out of the opening range and every downtick out, you'll be broke fast. You know, so just like any other trading process and any other trading method, there are multiple ways of being defensive in your trading. First of all, being quick. You have to be quick in your execution. You know, there's two types. You know, we talked about the 4 types of traders, right? The roller coaster traders, the break-even traders, the consistently profitable traders, and then the ultimately profitable traders. There's only two parts to every trade. Hey, Gerard, by the way, can you see my ring? See my ring, Gerard? I see your name is spelled the Irish way. I like that. It's my nephew, by the way. It's got the same name as you. Spelled the same way. Ginger-haired kid. So there's two parts to every trade: managing the risk and managing your profit. Traders that break even, no, managing, this is something else to write down. There's 2 parts to every trade. I'm 1.5 generations. My father was, my mother was American, and only my mother was only half Irish. How about that? She was half Croatian. My father married her because she could cook. But my dad was from Cork. So the 2 parts to every trade: managing your risk, managing your profit. Traders that are on the roller coaster never learn how to manage their risk. And Matt, I'm getting there. I'll get back to that, okay? Again, trying to, and overcooked. Overcooked everything. Irish only know how to overcook everything, including beef. I think I can smell Jen is half Greek, so hopefully the steaks will only be half burnt tonight. See if she's over there. Anyway, 2 parts to every trade: managing your risk, managing your profit. And Traders that are on the roller coaster never learn how to manage their risk. Traders that are consistently losing money, they never learn how to manage their risk or themselves. Traders that are that break even, that are consistently breaking even, they learn how to manage their risk. They have not yet learned how to manage their profit. I think I came up with this, by the way. Everything else, probably I heard someplace else, but I never heard this before. You know, you just pick things up along the way, right? Traders that break even have learned how to manage their risk, not learned how to manage their profit. Traders that are consistent have learned how to manage both. Traders that are ultimately consistent, that make, you know, the 1 or 2% of traders that make more than $1 million a year, have learned how to exploit their profit, increase their size without increasing their risk, or at least without significantly increasing their risk. And those are all things that I've learned how to do through the years. And I've been a part of all of those traders. One part, before I get back to this, Matt, Mickey Hoffman told me when I took his mock trading class, and that's part of the, this is part of the answer to your question. So see, even, you know, like this is how I answer questions, stories, and sometimes I get lost in them, but usually I get there. So Mick told us, and I didn't want to hear this, man. I did not want to hear this. Mick told us, and this is back in the early 90s when I took Mickey's class. I started with $10,000 in my account. My first seat lease was $3,200. So immediately I'm down $3,200. Then all kinds of guys that I'd worked for came in and gave me bonuses. Hey, Pax, I sold you 5, I bought 5, 500 here, 100 here, that kind of shit. So I had a little bit extra, a little help there. But I took Mick's class when I couldn't figure out how to make money. It was a mock trading class, taught us how to trade on the floor and how to manage our mindset. One of the things that Mickey told us was to have enough money, and this is important. You know, this goes back to giving time, giving the market your time, giving time, giving time, okay? Giving the market your time. Have at least 1 year's worth of bills in reserve. When you start trading, don't expect to trade to, or don't put yourself under the pressure of having to make money out of your trading accounts to pay the light bill. If you got to pay the light bill from your trading, you're going to be in some trouble. You just are. I talk about being CCFF constantly. I know that you guys have all read that, being confident, carefree, fearless, and focused. And that's what my morning routine is about. It helps me. It's like a morning checklist. I know whether I'm confident, carefree, fearless, and focused every morning before I sit down because of my morning routine. If I have any sort of pressure on me, whether it's physical health, and I've got some health stuff going on, whether it's that, or any of my kids, or I've got a big bill, or whatever. I've always had a tendency of when I come back from a vacation to lose money, or if I buy a house, I lose money, and if car, I lose the amount of the car, that kind of stuff. And that's an old trading adage, but it's true. It's all mindset. So if I concentrate on that next trade, only that next trade, and if I concentrate on protecting myself on every single trade, then I don't have to worry about going to buy a car and losing 100,000, or going to buy a house and losing the price of the home, or whatever. I'll protect myself at all times. So I don't have those swings anymore like I used to. The market isn't always going to pop out of the opening range in the first attempt. Back to that, Matt. If it's easy, I want it. If it's not, I don't. I take 2 trades, I cut my size, 4 trades, I wait. Whenever somebody comes into trading or trading into my group, I don't care if you've been trading for 5 years, I always suggest that you trade on the simulator, because inevitably it happens time and time and time again. People will come in and be, holy cow, look at this works. Pax, you're awesome. This is fucking great. But then the day where it's choppy and hard to get out, we go back into the opening range, multiple times. All of a sudden, they're down all kinds of money. Well, what do I do? What do I do? Trade in the simulator, learn how to handle it. Listen to what I say day in and day out and do those things. Do it day in and day out. And I'll show you how to deal with choppy markets. I'll show you how to deal with markets that don't come out of the opening range very easily. It's very difficult to explain it. It's very difficult to explain it because different market conditions require different actions and reactions. Different market conditions require different actions and reactions. And that's the cool thing about trading, is that every day is different and every trade is different. It's like snowflakes, right? No two snowflakes are alike. No two trades are the same. No, Ian. No. I wouldn't suggest that you. All right. Anthony asks, Pax, thanks for this and the guidance in the room. You mentioned that if it doesn't come out on the first attempt, would you recommend to skip it? Not necessarily. Again, the answer is it depends. It depends. You're right, Tim. It really is the best thing about trading. Every trade is different. Every day is different. Every day is unique. Every day is unique. Now, of course, we're looking for patterns to repeat, and they do. Yeah, the market, my targets, you'll see the market. Hold on, Anthony, I'll get back to that. 39.12. You guys remember how important 39.12 was in the S&P? You remember how important 39.12 was to the S&P? Well, it was important to us January 1st. It was my upside target. Not you guys who were in the group. I mean, other traders. It was 39.12 was important to us January. Well, actually December 21st. Or 22nd, whenever the hell December expired. 39.12 became an upside target for us and a magnet. So 39.12 is like a magnet. It's pulling the market up, right? So when we got above, when the yearly opening range is the biggest range of the year, 37.48. When we got above the yearly opening range, 37.48, then we have targets along the way, 37.48, and then I got to look at the notes, but you guys maybe remember them better than I do. 37.48, 38, 37.79. Then that became 38.82. Yeah, actually I remember them now. 38 even, remember, and then 38.11 up to 38.31, 38.31 up to 38.52. 38.52 to 38.57, but one step at a time, one rung at a, like a ladder, one rung to the next, 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 until we get to 39.12. Now we've taken out all of our upside targets. We have some targets in the 43 handle, but above that, we're looking at 45.42. 45.42 is our yearly goal, our yearly magnet. And the market will pull it up there unless there's some news that comes out. We crash like last year. Our yearly goal was 36.62. Well, we went down to 21.74 in the S&P first. 36.62 was our yearly goal. Yet we went down to 21.74 first. We hit that goal in November. The NASDAQ's goal was, the yearly goal in the NASDAQ was 10,628. They went down to 6,700. I don't remember the exact low, 6,700 in the NAS. But the NASDAQ got there first. The NASDAQ reached its yearly goal in June, I think. So would I recommend skipping it out of the opening range? It depends. It depends on the price action. It depends on the day, and it depends on your outlook in the market. It depends on how you see it. It depends on how relaxed you are, how much pressure you have off of you. It depends on if your view of the opening range is chaotic or not. If it depends on if you're the kind of trader, I meant to say this earlier, if you're the kind of trader that is looking to take those scratches and get back in, you're quick in your execution. Or if you're the kind of trader that buys 43s and needs to put your stop in a few ticks below it, in which case, then we can talk about that during the day or in group mentoring. Anthony, yeah, Anthony, you're Anthony from our group, right? From group mentoring, or is this another Anthony? Okay. So Anthony is a new trader in the Pax Group, but he's also a member of our group mentoring. We have a group mentoring session that meets twice a week, Mondays after the close for an hour and a half, and then Wednesday mornings before the open. So our European traders and our traders from, well, we don't have anybody from Asia right now, but our European traders are able to make it too. And the hours, those hour and a halves are your time to ask questions, you know, like the question that Anthony asked, or Matt, the question that you had asked. Those are the times that we're able to really kind of delve into things so that I can help you answer your question. I can answer your question all day long, but what good is that going to do unless you're able to put that into action? And the way you put it into action, and the way that you visualize the market, the way that you're able to manage your trades and manage your risk is going to be different than me, or going to be different than Bill, or going to be different than Corinne. We all, every day is different, every market is different, every trade is different, and every trader is different. There is no one size fits all. The answer should always be, it depends. Mostly it depends on you. So utilize the simulator. If there is one thing that I've learned through the years, it's that there's always going to be tomorrow. There will always be another trade. If I missed a huge trade, well, there'll be another one. There'll be another one. I missed 08 and 09. My mother died in June of 08. My sister died in November of 08. And my mother-in-law died in February of 09. I was trading for that fucking break in the market every damn day. I was, oh my gosh, I can't tell you how short I was in those creeping rallies that we had like this. Every day. But my mother had ovarian cancer. She ended up, you know, getting worse and worse and worse. And I wasn't, you know, there was no amount of money in the world that was going to take me away from her bedside. My sister had leukemia. There was no money in the world that was going to keep me away from helping her transition from this life. My mother-in-law, well, oh God, I'm just teasing. God rest her. She was a beautiful Irish woman, Kathleen Kelly, and you know, my wife misses her to this day. And my wife is the most important woman in the world to me, and so I wasn't going to let her go through that shit alone. And in between that, our son Gabriel was in the hospital with an immune deficiency. He had pneumonia. He had viral meningitis. That was one of the scariest things I had ever been through. I've been told, I've heard those words before. You have cancer. That's scary. But when they come in for your 4-year-old son, Gabriel's 4 then, dressed up in fucking spacesuits to test him for bacterial meningitis, that's some scary shit. Anyway, I missed that break. And you know what I missed? Gatsangul, as they say. I missed nothing. I didn't miss anything. Maybe I would have been long. Who knows? I don't Monday morning quarterback trades. If I missed it, I missed it. One thing I do know is that there was certainly another version of 08. We've had plenty of them. Easy question. I enjoy using the dome because it truly keeps me focused on the price action. But when, oh, okay. But when do you think it's okay to trade from charts? I don't, you know, I see, again, it depends. That's, I'm just going to say that for everything else. It depends. Now, I think that I only trade on DOMs, or the DOM, or domes. I only use domes. I don't think I've ever made a trade on a chart. I made my first electronic trade in 2003, up in this little office we had tucked away that nobody knew about. And I use TT. I've only either used TT or CQG integrated client. That's CQG integrated client. So I've never made a trade on charts, so I might be a bit biased. But on the way that I execute, buying 43s, the market gets back inside, I'm out. Price comes back through, I buy them again. Here. I know you guys can't see this. I think I'm signed out. Anyway, but 41.67.5. If 68 is the top of the opening range right here, I've got my cursor right here. Price comes back up, click long. price comes back, then I put my cursor on the sell side, price comes back out, I have my cursor on the sell side, I'm out. I don't find that chaotic. I slow my mind down so that I see the markets in slow motion, and I talk about that. That's, before, one of the last thing I say every morning before the market opens is to breathe in and out, to slow your heart rate down so that your brain is relaxed and you can see what everybody else sees as chaotic price action in slow motion. Even if the market has a 20 handle opening range, we still want to be able to slow it down so that we can see the market. Okay. So we need, the way that I trade, I'm quick, I'm nimble, I'm in, I'm out until I find the momentum of the market. That means that I trade on the domes because I've got that agility on the domes. Here's the thing though about that is that, these bright lights, these blinking lights, this is again why we trade on the simulator until, now one thing about the simulator is don't go in there, and if you're on the simulator, trade it as you would live money and be as serious about it as you possibly can. If you trade on the simulator like you would it's live money, then you're putting yourself in you're doing it right. And if you're able to make that seamless transition from simulator to live to simulator seamlessly, then you're becoming a real trader. I don't like saying the word professional trader because that, that has other connotations, but you're becoming a real trader. So utilize the simulator to figure out whether you're the trader that's going to get in and out quick enough, and to learn how to control your thoughts, to remove yourself out of the trade, to remove yourself out of the equation using the 4 pillars of capital management. Market protects me. It is until the market protects me, I have to protect myself. So this is something important to know. Every time I select a trade, I immediately assume that I'm going to have to get out for an expense. I don't like saying a loss. I don't ever say I win. I don't win money. I earn it. I make money. And I don't like saying I lose money. I spend money. Okay. I mean, they might be words, but words are important. So some of us have a tendency to be pulled in to the price action on the dome, to get sucked in to over trading, and our 2x4 goes out the window. So in that instance, if you're that kind of a trader that has not spent the time on the simulator to learn how to be able to remove yourself out of the equation by utilizing the 4 pillars of capital management, if you're still involved either with your ego or your emotions or all of them, then maybe trading on the chart is going to be best for you, and giving yourself a point or 2 points worth of risk in order to be able to find the trade. That's not how I trade, but that doesn't mean that that's got to be the way that you trade. Here's the thing about trading. This is something you've all heard me say, and it's also something that you've all heard, those of you who are not in the group have all seen me tweet. There are a million ways to make money trading futures, a million ways to make money trading futures, but there are 50 million ways to lose money. And most of us don't even have any idea what those ways are. Always be on the lookout for these things. And if there's one mistake that I've made in my career, it's not making adjustments to different market conditions quick enough. I didn't adjust to the way that the pits were changing. You guys have all heard about Navinder Sareo, when Nav and the guy that we called the Russian were picking me off on 100 lots, and I'm averaging in all the way up, and these guys are buying them, and they're making tons and tons of money, and I'm lucky to escape with a $10,000 loss. I could have been making that kind of money too, but I did not adjust to the changing market conditions. I have learned how to do that, now. So when the markets are busier, there are different, like I was saying earlier about the size of the bids and offers. There are other factors in play that are going to help me make a decision to increase my size pretty quickly or to decrease my size. I am really, really good and really, really quick at cutting my size and to put myself on the bench and to stop trading. It's important to know that. There are methods of determining momentum around the opening range after the open to help in deciding to take that. Yes, yeah, Spiros, yes. That is 100% right. there are definitely methods of determining the momentum so that you don't get sucked into taking every uptick or downtick. And again, that takes time. Give the market your time, not your money. That takes time to figure that out, how to best be effective in using this strategy and this process in trading. It's always about the process. I've taken my P&L off my screens years ago. I took my P&L off my screens a long time ago. I don't know how much money, well, I mean, I always have an idea, but I don't know how much money I'm up. I don't even look at my statements. My wife does. My wife was a clerk on the floor for 18 years. She takes the money that I made out of my account so that I don't have to be cognizant of how much money I made during the week or how much money I didn't make during the week, right? It's not about the money. It's about the process. Learn the process, stick to the process, and the money will be there. More money than what you ever dreamed of. If you trade the money, you're going to cover. If you've got your P&L up on your screens, more often than not, at least I do, I would cover trades because, oh shit, look at that. I'm up 10,000. I'm up 1,000. Oh, I gotta hurry up and get out. Why would I get out at $1,000? You know, that's another thing. I've heard a lot of traders say, you know, once I get up $1,000, I stop trading. What? Why? If you're up $1,000, you're trading well. Why would you? Why? If you've got, why would you want to limit yourself? If you're seeing the market, remember earlier, if the market is easy, if you're finding the momentum in the market, you've got a trade setup that you see, and you take it. You know the most important part about the trade. What's the most important part of any trade? Any trade. The most important part, the only thing that we need to know about any trade before we take it. Where are we going to get out? Where are we wrong? And where are we right? Where will I get out for an expense and where will I get out for a profit? Those are the only two things that I need to know. If I know where I'm wrong, I can take that trade, even if it's a momentum-based trade. And a momentum-based trade for me is taking a trade in the middle of nowhere just because I see something. So, you know, the other day we're talking about 43. We get up to 59. There are going to be times where I'm going to take a trade. I take that trade out at 59. You know, I'm going to give myself only 2 shots at it. The market gets underneath it, I'm out. That's it. And I'm not going to give it more than a tick, 2 ticks, because more than likely I'm already long. So if I'm adding someplace, I'm long gold. Where the hell is gold at? Hey, where's our big target in gold at? Where's our big target from 1682 on the downside? What's the big target in gold on the upside? Corinne knows because we were talking about it. 1777. And look where we're trading right now. I'm still long my runners from gold at 1688. No, not 1688, 1680 and 1682. I stuck with my process. I paid for the trade at at 1690 something. I took profit at 1701 and then 1721, 1744, and I'm still long my runners. That's it. It's a nice trade. I stuck to my process and the money's there. If the market would have gotten under 1682, I would have covered and flat. Guys, I hope this is you know, thank you, Mark. You know, it's just 1682 was a big target. I don't trade gold. That's something though. Okay. I don't trade gold from the opening range. I trade gold from targets, from target to target. So yeah, this is a good thing to end on, I think. We all need to be able to visualize the market. All of us, every trader, Matt, this is important for you to realize, okay? Matt B, we all need to be able to visualize the market. Yeah, when I talk during the day, when I'm on camera during the day, when I'm live, you know, you guys will all see me close my eyes a lot. And even tonight, I'll close my eyes because when I close my eyes, I'm visualizing either what I'm thinking about or I'm visualizing what I'm going to say next, right? But usually what I'm thinking about, you know, I'm visualizing it. We all need to be able to visualize the market in order to be able to take action and make money from it. Mickey talks about how these are seeing markets. Our eyes see things quicker than our brain can process it. Some of us process information quicker than others. I'm one of those people that are great in emergency situations. You know, somebody passes out, I'm the first one down there, fucking CPR, mouth to mouth, all kinds of, you know, cool shit. You know, I'm that dude. Car accidents. When I get in a car accident, everything slows down. Or in an emergency situation, everything slows down. What the hell was I going to say? Use the opening range as a way to visualize the market. So like in crude, the way that I see crude, not crude, gold. I trade crude from the opening range. The gold and bonds, I trade from target to target to target to target. I don't trade it from an opening range standpoint. I use the opening range to be able to visualize the market so that I can take action in it. How else are we going to be getting long at an all-time high? Every day is an all-time high open in these markets, 41.14, 41.43, 41.76, every day, all-time high open. Every day is just another opportunity to buy strength and to be able to maximize our profit and to minimize our risk. That's it. That's the name of the game. So I use the opening range as a way to be able to do that, to be able to visualize that day's trade and hopefully take advantage of the entire range that the day has to offer, whether it's a 20 handle range or a 200 point range. I want to take advantage of the entire range. And I want to leave something left over and something on for the trend, for the greater trend. So remember that break last year from the last weekend of February, 33.83 half short, 33.69 half a target short. Didn't trade that Friday. We closed at 33.28. 33.28 on that Friday. I forget what it was, February 20 something. We opened up that Sunday night 32.53. Gap down, opened up the next morning. Regular trading hours opened at the yearly opening range of 32.31. It was a freebie. All I did was trade the opening range every day, but it made me look smarter than what I am. Because remember, I know enough to know enough that I don't know enough. So I stick to my process, as Bill was talking about in his comments. I stick to my process and the money came. We're short from the opening range that Thursday at 33.80 half. I added at a target of 33.69. I took profit, and I kept my runners. We gapped down. I had a career-making trade that year. I hadn't had that kind of a trade since I was on the trading floor. I hadn't had that, and I've had some pretty good years on the screens. It was by far the best last year, you know, and not because I'm smart, but because I followed my process and because I let my process take me to where it went, to where the market was going. I thought we had a little bit more. Oh, that's another thing. You know, we're all sitting around talking about, I was in Naples, Florida with Merritt Black and Anthony Credelli and Josh, you know, the guys from Trade with Profile. We were having a great time. Warren Straub talking about the markets and having a great time. And, you know, everybody's got predictions. Everybody's got smart sounding stuff, but me. I was short and I was adding to shorts. But I had no predictions. Where do you think the market's going going, Pax? I don't know. You know, I'm short. Oh, so you think it's going lower? Where do you think it's going? Could go to 21. You know, what was it that we said? 21.30? You know, but first it's got to go to 29.44. It's got to go, you know, and just let the market take me. Because again, I know enough to know enough that I don't know enough. So I need to utilize the 4 pillars of capital management. And I need a way of visualizing the market so that I can take effective action in minimizing my risk and maximizing my profit. And that's it, guys. That's it. Trading is really, it's really that simple. Trading futures is that simple. You can make it as complicated as you want to with options and spreads and you know, capital flow, fundamental macro trades, but even then, you know, it's that simple. And you know what happens to traders that don't keep it that simple? They become technical analysts. Traders that like to keep things fucking complicated, they become technical analysts that sell their stuff to other people. Traders that are able to visualize the market, see the market, learn how to remove themselves from the equation and let the market do the work. That's a big thing for me. And that's a big thing for most of us who left the floor. We fought the algorithms. You know, we were used to being the market makers. I'm not a market maker anymore. I'm a market taker. I've had to learn how to let the algorithms do the work. So all I'm doing every single day is keeping things simple, and I'm trading for chunks of money. Every price change is another opportunity for me. Not necessarily an opportunity I want to take, might be an opportunity for me to exercise those dreaded words of discipline and patience. But every price change represents an opportunity for me to pull money out of the market. Think of it as a, you know, we talk about this a lot during the day, a river, the capital flow, money moving in and out of markets 24 hours a day, 7 days a week, even when markets are closed, prices are changing. Do I want to take advantage of every price change? No, I can't. I've had to learn the difference between the noise of the market. I've had to learn the difference between a wiggle in the market, and I had to learn the difference between the actual move, and I had to learn how to let the markets, the algorithms do the work for me and not fight them. And to realize that, you know, I'm not a market maker. And again, I'm a market taker. So guys, you know, I don't know. I don't market the group. I don't, and I know I'm none of the YouTube videos. I've never done that, but I'm not going to do it now. But you know, we do have a great community of people. Shelly is going on vacation. Shelly, are you here? Shelly and Bill and Spiros, JB and Adam, Peter, and so many of us, you know, we're a real community of traders. You know, we become really close. One of our traders is in the process of dying. He's got cancer, very serious cancer. And God has graced me with the opportunity to be able to help him transition into, you know, without getting too into my Irish Catholic faith, you know, transitioning into God's hands. We become close. We share each other's successes. We share each other's challenges. We share each other's experience so that, you know, as you know, we help each other become sharper. We help each other become better. Because if I am not actively working on being a better person, I am not going to be a better trader. If I am not every day trying to be the best version of myself that I can be, I will in fact start taking steps backwards. My weaknesses are in the background, doing push-ups and getting stronger, waiting for me to drop my guard so that they can whack me on the chin. I don't want that to happen. So I trade defensively every single day. I look for those easy trade setups and I take them. Anything else, guys? Any other questions or thoughts or concerns or anything? Did I leave any doppelgangers out there that you want me to tie up? I've been known to do that from time to time, you know, getting lost in one of those stories. Is there anything that you guys, is there anything that you want to hear from me that I haven't addressed? Again, if you guys came here looking for the greatest of all time chart, the GOAT chart, or, you know, the secret fucking, you know, the golden chalice or the magic matrix or whatever, there isn't one. The answer is inside of you, you know. The answer is learning how to stay out of the way of the market, learning how to visualize the market and take effective action and keep it simple and to repeat it. Not just the next day. You don't have to worry about that because the next day isn't here. Just on that next trade. You don't have to worry about doing it again next month. You don't have to worry about doing it next year. You only have to worry about doing it that next trade or that next 2x4. Remember, give yourself another 2x4. Give yourself a 2x4. You'll be okay. You'll be okay. Remember those words. You'll be okay. As long as you learn this process or any process and you stick to your process, you'll be okay. One of the, I don't know why I started to do this a long time ago, when we started the group a year and a half, almost 2 years ago. Shit, it'll be 2 years. I guess it is about 2 years. It was 2 years in fucking late April, early May. Anyway, excuse my language. Hey, Mark Ellis, are you still here? Where are you from, Mark? If you guys want to unmute and just talk, let's do that. This is a Zoom. We can talk here. Why am I the only Doomcoff talking? Oh, I thought you were from Chicago. I don't know why I thought you're how old is your high school baseball guy? Oh, geez. I'm drooling on myself. Excuse me. Look like a goof. We got a couple of traders from KC. John Crow was here. He was in KC. All right, Matt. Hey, all right. So listen, I'm going to tie it up. I got a message from Matt. It's 1 a.m. in the EU. So listen, guys, this is how I end every day, okay? And it's hokey and it's corny. Oh, did he play at Mizzou? It's hokey and it's corny, but I say it every day, and I think it sums up the way that this group has really become. And I write it at the end of every, if you guys click on the link to read my plan from Thursday, you'll see it. I write it at the end of every plan. I don't tweet it out very often because, I don't know, it's hokey maybe or corny. But as my mother used to say, and she said it to us every night when she put us to bed, sleep with the angels and the saints, Matty B. Sleep with the angels and the saints, my young brother. And nobody fights alone. Thank you for being here on a Sunday night. Thanks for spending your time with me, guys. And I hope to God that there was some stuff in here that, I hope there was something that I said in here that was worthwhile. I forget what movie it was, but I remember it stuck with me. The woman said that I hope I earned the privilege of your time, and I always feel like that. I really do. So thanks for spending your Sunday night with me, guys, and I hope that I've earned the privilege of your time. For those of you guys who are in our group, I'll see you tomorrow. For those of you in the Twitter sphere, I'll see you there. If you want to join our group or check us out, go to www.thepaxgroup.org, www.thepaxgroup.org, and sign up for a free trial. And while you're in there, ask any question and every question that you want to. And I'll, I'm seriously an open book. I mean, I'll tell you anything. Well, most anything. Everybody have a great night. And again, sleep with the angels and the saints. And none of us fucking fight alone unless we choose to.